Okay, so we have a question here. Mahewu manufacture stationary items. Let me zoom in a bit. Yes, stationary items such as pens and pencils. You are given the following extract of the balances for Mahewu trading, the trading account 31st December 2024. Okay, so here you put your sales, revenue returns, all this information here, colleagues. Right. Then the question is asking, prepare the manufacturing account for my health. All right. Colleagues, what is the purpose of the manufacturing account before we start solving? What is the purpose of this manufacturing account? Mr. Twambo, Mr. Vincent, Mr. Trevor, Mr. Nelson. Hey, colleagues. Okay, Madam Sylvia. Yes, Mr. Boniface. Yeah. Okay. Yes, Mr. Nelson. Yes, sir. Okay, thank you for that. It's true. Yes, it's true. I just want the main reason why we're doing that. Okay. But those are part of the risks. Yes, Mr. Boniface. Mm-hmm. Okay. Wonderful, sir. Wonderful. Yes, colleagues, are we okay with that? The purpose is to calculate the cost of the goods that have been manufactured. All right. So remember, this manufacturing account can be broken down into three main parts. What are these three main parts? The manufacturing account, okay, it's like it can be broken down into three sections. All right. They've got direct materials, direct materials, direct labor, and manufacturing overheads. Colleagues, what are overheads? Because in cost accounting, you are going to find this next year. You will find this in cost accounting. What are overheads? Please go ahead. Not directly associated with the finished product or not easily traceable in the finished product. Thank you, madam. That's correct. All right. So the first item we're going to put here is direct materials. Here we have to find the total for the direct materials. So under direct materials, what is the first item we're going to put? Those who made the list, who answered. Mhm. Mr. Twambo, what's Mhm. Okay, so. Uh-huh. Yes, raw materials opening stock, right? So we can just put here opening. Uh-huh. Yeah, yes. So long as you put the heading there to direct materials on top. So when you put opening stock, the marker is going to know, oh, he's talking opening stock of raw materials. Okay, so here opening stock is from our opening stock is 16,000. What next? What is the next item? Thank you. Purchases of raw materials. Okay, so purchases of raw materials 117,000. Yeah. What next? Carriage inwards, yes. The delivery charge we paid when bringing in these raw materials. Any questions, colleagues? Are we okay up to this point? Okay, no questions? All right. Okay. If there's any purchase returns of raw materials, you deduct in case the company returned any raw materials. Oh, someone wants to join. Okay. Mhm. Colleagues, what do we do next? For those who attempted the question and have now fully understand this, what do we do next? Uh-huh. Yes. So when we add these two, the opening stock plus the raw materials that we brought in, this is the total cost of the raw materials. Yes. So what is the next item we're trying to find now? Mm-hmm. Okay. So what are we trying to find by subtracting the closing stock of the raw materials? What are we trying to find? We're trying to find the cost of the raw materials that have been used. Okay, colleagues? Want to find the cost of the raw materials that have been used. Okay, because we haven't used all the raw materials. We remained with some worth 166,000. All right. So now I'm interested in the raw materials that went into the manufacturing. So let's closing stock of raw materials. Raw materials closing stock 14,000. So we subtract 122,000. Cost of raw materials used. Any questions, colleagues? Okay. What is the next item now? Yes, direct labor. These are the workers who, so these direct materials, this is what is used in the finished product. The direct labor, these are the workers who assemble the product. Okay. So here we have direct labor 145,000. All right, so direct labor 145,000. So we add these two to get, let's say, are there any direct expenses? Any other direct expenses? No. Okay. Yes. So we add these two to get our prime cost. Remember, the prime cost is the direct labors plus direct materials. Okay. So this is our prime cost. Okay. What's the next thing now? Yes, our overheads. Okay. So these overheads, one, they should have the word factory attached to them. If they don't have the word factory attached to them, then they're going to go either in the trading account or statement of profit or loss. Here, we're only focusing on the overheads for the factory. Okay. So we've got factory indirect labor. Oh, why am I even giving the answers? Yes, Mr. Twambo. Which ones do we put here? Why am I spoon feed? Uh-huh. Factory indirect material. Wait, isn't there depreciation also? Colleagues, remember, plant and machinery is not in the office, okay, colleagues? Plant and machinery is not in the office, it's in the factory. Okay, so we have to account for the depreciation for plant and machinery. Okay. Because if you leave it, then you're assuming that they are producing these goods in the offices, not in the factory. Factory expenses 20,100. Okay. Yeah, so plant and machinery. Okay, they've told us depreciation for plant and machinery is at 10% straight line. Okay, so when you mean 10, you just get 10% of the cost of the plant and machinery. Okay, so we're going to say 10% over 150,000. What is 10% of 150,000? That should be 15,000 if I'm not mistaken. Okay, thank you, thank you, thank you. 15,000, yes. Colleagues, what about this provision for depreciation? What is it? What is it? I know as you are trying this question, you were like, what about this provision for depreciation? What is it telling us? What is provision for depreciation? Okay, provision for depreciation is also called accumulated depreciation. Okay, so each year when you calculate a depreciation expense, it keeps the depreciation keeps adding up. Because remember, depreciation is the loss in the value of an asset. So as the asset is being used throughout its life, also the depreciation is increasing. All right. That's why you see in the balance sheet the cost of the asset minus the accumulated depreciation, which gives you the net book value, which is just telling you this is the value of this asset today. Okay, colleagues. So you're not going. Hmm. Provision for depreciation. This is the depreciation that accumulates each year. As the years pass and the depreciation is accumulating, the value of the asset is going down. Is that okay, sir? Okay. Okay, so we get our total overheads. Mm-hmm. Okay, straight. No, that's a good question, sir. Straight line method, it just means the depreciation charge is the same the whole every year. It doesn't change. Okay, so like here we've calculated the depreciation charge is 15,000. So even next year the charge is still going to be 15,000. The other year 15,000. That's a straight line method. Then with the yes, then with the reducing balance method, the depreciation expense starts to reduce as the years go by. Okay. Obviously, this amount I should put it here because we've got the work in progress adjustments that we need to. Oh, wait a minute. Those adjustments we do after we total these up. Okay, so we total up raw materials consumed. Oh, we already got our prime cost here. So we just said prime cost plus overheads. Okay, this prime cost plus this, we get the total manufacturing costs. So what do we do next now? Yes, add beginning work in progress. Well, work in progress. Let's see. This one here, the 800. Add beginning work in progress, 800. Then what else? Less ending work in progress. Sir, you asked me this last time. It was you even asked me this. Sir, what this? You remember it, huh? So tell the class then. Because obviously there are those who haven't remembered. So they're saying they're hoping for you to tell them that. Please tell us the answer. Yeah. Yes. Yes. Okay, thank you very much, sir. So, beginning work in progress. This is the unfinished goods that you start with. All right. That's why we're adding them. Okay. If you want, you can put them here. You put the 800 and negative 1000 here. You add them. You get a negative value. Then you add to the total value. Or you can still just put it like this here. Yes. So the beginning work in progress. These are the ones, the unfinished goods you begin with at the end of the at the beginning of the year. All right. So that's why we're adding it to the manufacturing cost because these will be the first to be worked on because they're partially finished. Then the ending work in progress. These are the unfinished goods, the partially finished goods that you remain with at the end of the year. Now, because we're only interested in the cost of the total cost of goods that have been manufactured, that's why we're subtracting this ending work in progress. Is that okay, colleagues? Begin. Yes, the following year is going to be uh, which, yes, yeah. Oh, let me not put a negative sign here. Just say less. So 332,800 plus 800 minus 1,000 gives you 332,600. The other way you'd have done it, you'd have put it here 800, then here less 1,000, you get a negative 200 here. Then you add this 332 plus this negative 200, and you still get this one. Okay, two ways to do it, right? I think I would advise this one is better. This one's better. Just put add less and you just get like that. Okay, I would advise this one, but it's up to you. Okay, whichever you feel comfortable with, you do it. Yes, colleagues, that is that for Mahel Manufacturing. Any questions? So that, uh huh.